over the past few years, we've seen that initially there was only money that was going into the pharma companies, but now investors have option. There are companies that are listed from the diagnostic space, from the hospital space, which gives them much more options. And you see the performance, what has happened, and you can see that money is clearly moving away from pure play generic pharma companies to ancillaries. Now, if you take a look at what's happened, the MNCs as one has done well. The diagnostic stocks have done well. So Dr. Lal, despite the premium valuation, has generated returns of almost 83%. Metropolis, and you can see a lot of MNC pharma companies. There is Abbott, there is Pfizer among the hospitals, there is Narayana Hrudayalaya. The only two pharma companies which have come in here generic play is Divi's. But remember, Divi's is an exporter of API, so not more of a generic pharma company. And the only one that features here is Dr. Reddy's, which has moved 10%. So overall, the play is shifting focus from pharma to related pharma ancillary companies. So that is what you can see among the companies. And take a look at how the pharma companies have performed. So Divi's is up 22%, Dr. Reddy's has done well, and the basic reason here is Alkem has done well because of the domestic focus, Torrent again because of the domestic focus. But the companies that are focusing on the export market, look at what has happened. Glenmark is down 50%, Aurobindo is down 40%, Jubilant, Cadila, Strides, Ajanta, all of them are down significantly. Not only are the numbers coming weak, there is also issues of the US FDA regulators. So that's the pharma space for you. So what is hurting the Indian drug makers? First of all, the competitive pressure in the US market after quarter and quarter, despite pricing being bottomed out as what the managements have said, there is a lot of competitive pressure. Most of the companies have not been able to come out with strong US numbers, which is the mother market. There is a spate of regulatory action. Probably 2019 will go as one of the worst years in terms of companies getting warning letters, coming under the US FDA scanner, getting a lot of adverse 483s, getting a lot of OAI. So there is a lot of issue. And now, because they have realized that there is not enough money in generic drug making, they are boosting their investments towards biosimilars, towards specialty products, and that is why that is also hiking the cost. So the bottom line impact is definitely being seen by increase in the R&D cost. Now, let's take a look at some of the diagnostic companies and what have worked for them. Dr. Lal is up 83% despite the premium valuation. Metropolis listed in Feb, so since listing it's up 56%. Thyrocare, which did extremely well post its IPO, is up just 5%. And one of the key reasons that Dr. Lal and Metropolis does well is a high concentration to the B2C segment, which is growing significantly. Now, what aids all the three companies is the shifting from the unorganized to the organized market, and all of them have shifted to asset-light model, which is aiding growth. So these are some of the key reasons why there is enough growth that is there. Now look at the MNC Pharma. We spoke in depth about Abbott and what had led to the rally, but look at the other companies also. Pfizer, Sanofi, GSK, Novartis has been an underperformer, but apart from it, the MNC Pharma companies have also managed to do well. Now what is aiding these companies? There is enough focus on the Indian market, which is doing extremely well. Brands are extremely strong. So if you take a look at the AIOCD numbers that have come out, most of them are strong MNC brands. The financial performance have increased, and there are new launches from the parents pipeline. If you saw what happened with AstraZeneca, that moved up 7% yesterday, was because of the drug launch that the parent did, which probably will make its way here. So there is enough strong brand, and obviously there is the MNC premium that they play. So that's the MNC stocks for you. Now, hospitals as a sector hasn't done that too well, except for a couple of hospitals. Narayana Hrudayalaya is done well because financially they have been able to turn around. If you take a look at the results that have come out over the past few quarters, they have managed to turn around. Some of their older hospitals have turned EBITDA positive. Apollo has managed to do well, but it's come off because of pledge concern issue. Some of the others haven't done well. Some of the recently listed companies, Fortis has issues of its own, but Shalby and Healthcare Global haven't done all that well this time around. So that's the trend. What is impacting the hospital space? First of all, financial turnaround is being rewarded for companies like Narayana Hrudayalaya as well as Apollo Hospital. Limited interest sales capex is extremely high. So some of the other companies in that space haven't done well. So Neeraj, the bottom line is that traditional pharma generic companies aren't finding focus, but there is money shifting to MNC Pharma. There is money shifting to diagnostic in a big way, and some of the hospitals have actually started getting money here.
Somehow diagnostics seems to be coming out as a clear winner, Darshan. Hospitals, pharma, diagnostics, that diagnostics pocket is done extremely well.
It is done extremely well, and and actually everyone's surprised that despite the premium valuations that they trade at, they still continue to do well. Thyrocare has been a laggard here, but both Metropolis and Dr. Lal, both of them trade at extremely high premium valuation. But I think it's more of people take diagnostic more as a consumption play and would want to give that multiple, because at the end of the day you're going to directly to consumer, and that is why when Dr. Lal and Metropolis have a high B2B segment, Thyrocare doesn't. So Thyrocare has a very high margin. So these guys have margins to the tune of 25%. He does margins to the tune of 40%. But despite that, the revenue growth on Thyrocare and Dr. Lal is much higher and the valuation is much higher there.